stocks advanced today following a 4-day winning streak for the S&P 500. Confidence on Wall Street also improves on speculation that more companies will be bought or return cash to shareholders. For a breakdown of today's trading, let's go to Courtney Donohoe, who's standing by at the New York Stock Exchange. Courtney, whoosh.
Well, Pimm, steady gains throughout the day. A big pop in the last hour. Corporate actions, those potential mergers and also buybacks, helping lift the markets. And we're seeing companies start to use more cash on hand. Well, first up, Travelers saying that the company will buy back more shares than it previously planned. And their guidance was for about $4 billion. But the CFO said based on capital, based on earnings, the insurer could raise it to as much as $5 billion. MasterCard, too, announcing a $1 billion share buyback and saying that profit will grow faster than some analysts expected. MasterCard expects income to rise at least 20% this year. And healthcare stocks, they saw some strong gains today. Stifel Nicolaus sees an increase in takeovers in the sector. Lazard said fundamentals for healthcare stocks, they're better than sentiment has reflected in recent months. And Tech, too, getting a bump once again today. New York Post saying that Novell reached an agreement to sell itself in two parts. One buyer is going to pick up the part that develops Linux, and a private equity firm that's going to pick up much of the rest. Pimm.
Now, Courtney, we did get some disappointing economic news, as I mentioned, manufacturing, and that weighed on the markets earlier in the trading session.
Yeah, well, Empire State Manufacturing, that's activity in the New York region, coming in below forecast for September, slowest pace in more than a year. And industrial production rose in August. Output rose 0.2%, but that was a big slowdown from what we saw in July. And one of the reasons for the weaker numbers, that was a decline in auto production. Now, manufacturing, we've been talking about this, main driver for the economy over the past year, but companies, they're not looking to boost output because they're really concerned about the jobs picture out there and if it will hold back spending.
Now, Courtney, lots of investors, of course, looking to Japan and to the Japanese government's intervention in the currency market. What kind of repercussions did that have for the market?
Well, Japan stepping in to weaken the yen. It's going to help exporters. That's been driving Japan's recovery. Yen was at 15-year highs against the dollar. That's been hurting companies in Japan that depend heavily on exports, Toyota, Sony, for example, and that's because their products, they're less competitive in overseas markets. But this is the first time that the government has done this since 2004. But a lot of analysts out there, they're saying the intervention may do little for the economy because Japan alone won't be able to keep the yen from rising. But the fundamental factors, Pimm, that are still moving the dollar-yen, they're still there. For example, if the U.S. loosens monetary policy further next week, that's going to put pressure on the dollar, Pimm.
All right, I want to thank you very much, Courtney Donohoe, reporting from the New York Stock Exchange.